reports on silver price and moves in the silver price in mainstream media and interviews in mainstream media on silver. Again, those are going to be some of the best indicators. They can catch up in the matter of weeks, days, weeks, months, absolutely. And so you can go from, portfolio that may be down 40 or 45% to down 5% in a matter of 3 months. So patience is very much rewarded often in the silver space, and you can go for long periods where it's very quiet, and then it just suddenly becomes explosive. I think that we're going to continue to see pricing power shift from west to east, and ultimately that's going to be good for that's right. If your Uber driver is telling you to get into
Did
silver,
you know that
you may
silver could
want to
skyrocket
rethink
to
it, or at least
$700 per ounce soon?
take some profits
Peter
if you've
Croft,
already been
a
in at
renowned
that
market
point.
analyst, believes it's
Silver
not just
News
possible,
Daily,
but
subscribe
inevitable.
for more.
Imagine the potential gains if you invest now. In this video, we'll uncover the factors driving this bold prediction, including the shifting market power from west to east and the surging industrial demand. Stay tuned to discover why silver could be your best investment opportunity yet and how you can benefit from this unprecedented market shift. Trust me, you don't want to miss this.
Clearly what the market is telling us. And if you look at what's been happening with with spot silver prices in China in particular, they're trading at $3 to $4 per ounce above what they're trading at in the US, for example. So it tells you that where the demand is for true physical silver, taking delivery of physical silver, because the Shanghai Exchange is a physical futures market. You have to have an ounce there. You have to have a bar there for what for your contract, to back the contract. And so people are buying silver off of that exchange, taking delivery, and they're prepared to pay to three to $4 higher. I feel that's a much better representation of true silver price. And I think that we're going to continue to see pricing power shift from west to east. And ultimately, that's going to be good for silver investors.
Peter Croft isn't just any analyst. He's a leading voice in the silver market with decades of experience. As the author of The Great Silver Bull, Croft has made a name for himself by accurately predicting market trends and understanding the intricate dynamics of silver prices. In his recent analysis, Croft forecasts that silver could reach an astonishing $700 per ounce. This isn't a random guess. It's based on meticulous research and a deep understanding of market forces. Croft's prediction hinges on several critical factors. He highlights the dwindling physical supplies of silver, the significant shift in pricing power from Western markets to Eastern ones, and the increasing industrial demand, particularly from the rapidly growing solar energy sector. These elements combined paint a compelling picture of why silver is poised for a massive price surge. But what makes this prediction even more intriguing is the context in which Croft presents it. With global economic uncertainties and inflation concerns, silver's appeal as a safe haven asset is stronger than ever. Croft's analysis isn't just about numbers. It's about understanding the broader economic landscape and how silver fits into it. In the following sections, we'll delve deeper into each of these factors, starting with the alarming depletion of above-ground silver inventories and what it means for future prices. But first, let's explore the broader market context that makes Croft's prediction so compelling. Stay tuned, and don't forget to subscribe for more expert insights and market analyses. Now let's dive into the first major factor, the dwindling physical supplies of silver.
That's right. So the obvious sort of huge, and for good reason, the obvious big demand factor is China. They control 80% of solar panel manufacturing or more, and that's been growing by leaps and bounds. Demand for silver from solar was up 64% last year alone. Solar now represents 20% of the entire silver market. And what we've been seeing lately is some big news out of India, really. They are working on building the world's largest renewable energy park. This is in Gujarat state in India. It's going to be 5 times the size of Paris. In February alone, silver imports to India represented about 2/3 of 2023's imports, so 1 month. And now we have news that already in the first 4 months of this year, imports into India have surpassed all of last year's imports. So India, despite sort of overall sort of smaller numbers in terms of silver demand versus China, is really quickly becoming a force to contend with. And I think that we need to start paying attention to what's
One of the most critical factors driving Peter Krotz's bold prediction of $700 silver is the alarming depletion of physical silver supplies. Over the past few years, we've seen a significant drawdown in above-ground inventories, especially in major futures markets like CONEX, the London Bullion Market Association, LBMA, and the Shanghai Futures Exchange. According to recent research, these inventories have dropped by approximately 40% since 2021. This decline in available silver isn't just a minor fluctuation, it's a major signal of a looming supply crisis. For years, the silver market has relied on these above-ground stocks to meet demand. But as these supplies dwindle, the market faces a tipping point where demand will outstrip supply, potentially driving prices to unprecedented levels. Several factors contribute to this depletion. Firstly, silver has extensive industrial applications, from electronics to solar panels, which consume large quantities of the metal. Secondly, investment demand for silver has surged, driven by economic uncertainties and the metal's reputation as a safe haven asset. As more investors turn to silver, the strain on existing supplies intensifies. Moreover, the mining sector isn't keeping up with the rising demand. New silver mine projects are slow to come online, and existing mines are struggling with declining ore grades. This means that increasing production to meet demand is not a feasible short-term solution. The situation is further exacerbated by geopolitical dynamics. Eastern markets, particularly in China, are aggressively accumulating silver, often paying premiums above international prices. This shift indicates a strategic move to secure resources and exert greater control over global silver pricing. In essence, the dwindling physical supplies of silver are setting the stage for a potential price explosion. With inventories running low and no immediate solutions in sight, the market is primed for significant upward pressure on prices. As we continue, we'll explore how the shift of pricing power from west to east plays into this scenario and what it means for future silver prices. But before that, consider this. How will the depletion of physical silver affect the market in the long run? Share your thoughts in the comments below, and don't forget to hit the subscribe button for more in-depth market analyses.
is if you're already in the silver space, that then I get it. If you're in the silver space and you feel you want more exposure, I get it. So continue to watch it closely. If you want to increase your exposure, look for an opportunity. Look for days where it comes off a little bit. If it sort of scratches the $30.50 level, somewhere around there, you may want to add a little bit. If it goes below 30, I would be looking personally to add a little bit. If you have zero exposure, I wouldn't wait. I would at least decide what is the amount that I'm prepared to ultimately allocate, and I would start nibbling. I would be willing to allocate a quarter or a third of a position now, despite it feeling a little bit expensive, like you say, that run up. But there's nothing like putting a few dollars into a stock or an asset, silver, for example. There's nothing like doing that to get you to watch that position or that new placement like a hawk, and you have true involvement in it and commitment to it. And so I guarantee you're going to start watching that very closely, almost on a daily basis, to see what it's doing. And so there's a risk that, paying $31 or $32, let's say, spot price for silver right now may end up being a little bit expensive if, as I say, there's some risk that in the next weeks or months that we go to 28 or even maybe 26. But that may also not happen. But getting in now, even at these levels, as I say, that'll get you committed to watching the space. And if you do get that pullback, I feel that's a cue to layer in a second tranche, perhaps, of capital.
One of the most significant trends in the silver market today is the shift of pricing power from Western markets to Eastern ones, particularly China and India. This geopolitical shift is a major factor in Peter Krotz's prediction that silver prices could soar to $700 per ounce. Historically, Western markets like the COMEX in the United States and the London Bullion Market Association, LBMA, have dominated silver pricing. However, this dynamic is changing rapidly. Eastern markets are becoming more influential, driven by their massive and growing demand for silver. China, for example, is the world's largest producer and consumer of solar panels, which require significant amounts of silver. The country controls over 80% of the global solar panel manufacturing market. In 2023 alone, demand for silver in the solar sector grew by 64%, and this trend shows no signs of slowing down. This immense demand from China is a key driver in shifting the pricing power towards the East. Additionally, Chinese consumers are not just using silver, they are accumulating it at a premium. Reports indicate that silver in China is trading at $3 to $4 per ounce above international prices. This premium indicates a strong localized demand that is willing to pay more to secure the metal, reflecting a strategic move to lock in resources amidst global supply constraints. India is also playing a crucial role in this shift. The country is embarking on an ambitious project to build the world's largest renewable energy park, which will significantly increase its silver consumption. Already, India's silver imports in the first 4 months of this year have surpassed the total imports of the previous year. This burgeoning demand positions India as a major player in the global silver market. The implications of this shift are profound. As Eastern markets gain more control over silver pricing, we could see a divergence from the traditional pricing mechanisms dominated by the West. This new dynamic could lead to higher and more volatile silver prices, especially as these markets continue to grow and industrial demand increases. For investors, this shift underscores the importance of understanding global market trends and the potential for significant price movements driven by geopolitical changes. The increasing influence of Eastern markets is not just a trend, it's a fundamental shift that could reshape the silver market for years to come.
There's a really interesting, a really interesting development with one company that I've written up, a company by the name Endeavor Silver. So they are a medium-sized silver producer. They're silver heavy, which is what I like. So majorities of their revenue is from silver production. Actually, a bit of a rarity in this space these days. And they on this would have been right around the 9th or 10th, I think, of May when they reported their first quarter. And it was a gangbuster day in terms of trading and gains. That stock was up 20%. This is a billion-dollar market cap company. The stock was up 20% in a matter of a few hours. They had tripled their trading volumes that day. And I think what happened was you had the prior 2 quarters where they were underperforming a little bit. The market, the big players that were watching wanted to get into the space, and that's a good name with liquidity and great leverage. And we're probably watching it very closely and saw for those 2 quarters, well, they're struggling a little bit, dealing with cost inflation. They're also in the process, by the way, of building out a new mine that's going to be very profitable on a per ounce basis. Again, silver rich, mine called Terra. And so this is a little past halfways. They likely will start production at the end of the year. So that's going to bring great leverage, further leverage to the name, to the company. And obviously, when you reach that first pour, that's when the market feels more confident and starts to buy into a given name and starts to push it up. So I think the smart money is already looking at names like that. Saw that when they reported on that day in May, their first quarter, and saw that it was essentially a switch from slightly negative to slightly positive. That was enough. That was enough, along with a silver price that was trending clearly higher, and they just decided to pile in. And it was a beauty of a day to watch what happened with that stock. And if you look at, I have the newsletter portfolio set up in such a way that I have and purposely I've got the larger and medium cap producers at the top of my list, and then I've got the small producers and developers next, and then I've got the explorers. Well, I can see in real time when the silver price starts to move, I can see who's moving and from which category. And it was clear in March and into the sort of the first half of April that it was the larger caps that were moving. And then as this rally matured, then you started to see the mid tiers and the developers rally, and then the juniors just took off at the end. And some names that were just dramatically oversold and pounded prior to this silver run up. Some of these names were up over 140, 160% in a matter of 2.5, 3 months. So it just gives you an idea of what we could look forward to as silver continues to run, and people feel that they've perhaps missed the boat, will not have missed it, but it's going to set sail soon. So it's definitely something that you want to at least have some skin in that game.
The surging industrial demand for silver is another key factor that supports Peter Krotz's prediction of silver reaching $700 per ounce. Silver is not just a precious metal. It is an essential industrial component used in various high-tech applications, and this demand is growing rapidly. One of the most significant drivers of this demand is the solar energy sector. Silver is a critical material in photovoltaic cells, which are used in solar panels. As the world shifts towards renewable energy to combat climate change, the demand for solar panels, and consequently silver, has skyrocketed. In 2023 alone, the demand for silver in the solar industry increased by 64%, making it one of the fastest-growing sectors for silver consumption. China leads the world in solar panel manufacturing, controlling over 80% of the market. This dominance has translated into a massive demand for silver. The country's ambitious renewable energy projects, including extensive solar farms, are major consumers of silver. Additionally, India is also ramping up its solar energy infrastructure, with plans to build the world's largest renewable energy park. These projects significantly boost the demand for silver, further straining global supplies. Beyond solar energy, silver is indispensable in electronics. It is used in the production of smartphones, tablets, computers, and a wide array of consumer electronics due to its superior electrical conductivity. As the technology sector continues to expand, the demand for silver in electronic components is expected to grow. The automotive industry is another major consumer of silver, particularly with the rise of electric vehicles, EVs. Silver is used in electrical connections and batteries, both of which are critical for EVs. As governments worldwide push for greener transportation options, the production and adoption of EVs are set to increase, further driving up silver demand. Additionally, silver's antimicrobial properties make it valuable in the medical field. It is used in medical devices, wound dressings, and even water purification systems. The ongoing advancements in healthcare technology and the increased focus on hygiene and sanitation are likely to sustain high demand for silver in this sector. These multiple streams of industrial demand create a robust and growing market for silver. When combined with the dwindling physical supplies and the shift of pricing power to Eastern markets, the case for significantly higher silver prices becomes even stronger. The convergence of these factors forms the foundation of Krotz's $700 silver prediction.
I mean, so you're right. There's actually very little resistance from once 30 has been clearly established as a new floor. There's not really there are a few stops along the way, to be fair, but I think that you look at technically and going back to 1980, the first time it reached that level, there really is little to no resistance between here and $50. I would absolutely expect, like you said, that we're going to see that tested a few times before actually finally breaking through, like we did 30. In the last 4 years, silver tested 33 times before just breaking out now. So the first time was in August of 2020, right after the pandemic hit, and silver went from, say, $12 to $30, about 140% return in 5 months. Then, and the silver squeeze, which was the end of January in 2021, it also ran up to about $29 or so. So the third time was just in the last month or so when it tested 30 and then just sailed through it. This was, I think, right around a couple of weeks ago in the middle of May. And so really looking quite strong right now. And there's some great work by a friend and colleague, Jordan Roy Byrne, who does some fantastic technical analysis. And he's basically said that this is one of the, silver silver's technical setup and run ultimately to 50 is going to be one of the biggest technical breakouts of history for any asset class, just because it has been so incredibly long that silver was at the nominal $50 level back in 1980. So a lot to look forward to. First, not that much resistance on the way to 50, and then after that, uncharted waters. I mean, there's no real clear technical upside after that. We've never been truly above 50 for any kind of sustained time. So it's going to be really exciting times. Looking forward to getting there and beyond.
To fully appreciate Peter Kraut's prediction that silver could soar to $700 per ounce, it's crucial to examine historical price trends and how past forecasts have panned out. Understanding of historical context provides insight into the current market dynamics and the potential future trajectory of silver prices. Historically, silver prices have experienced significant volatility, often influenced by economic conditions, market sentiment, and industrial demand. For instance, during the financial crisis of 2008, silver prices plummeted to around $9 per ounce. However, as the economy began to recover and investors sought safe haven assets, silver prices surged, reaching nearly $50 per ounce by 2011. This dramatic rise was driven by a combination of investor demand and industrial uses, mirroring some of the factors we see today. In more recent years, silver prices have fluctuated between $15 and $30 per ounce. The COVID-19 pandemic initially caused a drop in prices, but as global uncertainty grew, silver saw renewed interest as a safe haven asset. By mid-2020, prices had rebounded to approximately $30 per ounce, reflecting increased investor demand and concerns over economic stability. Looking at expert predictions, there's a wide range of views on where silver prices could go. Some analysts, like A.V. Gilbert, foresee silver reaching $50 in the next few years, while others, such as David Morgan, predict that once silver surpasses $50, it could quickly climb to $70, $100. Randy Smallwood suggests that gold will lead the way, with silver rapidly following and potentially exceeding $50 after gold breaches $2,200. Peter Kraut's analysis, however, takes these predictions further. He argues that silver's price could skyrocket to $700 per ounce, driven by a unique confluence of factors: dwindling supplies, surging industrial demand, and a shift in market power from west to east. Kraut's forecast is built on a model that also predicts gold will rise to $5,000 per ounce by 2030, leveraging the historical gold-to-silver ratio to support his silver price target. These bold predictions are not without their risks. High market volatility and external economic factors can significantly impact price movements. For instance, interest rate changes, geopolitical events, and shifts in industrial demand can either support or undermine these forecasts. Therefore, while the historical trends and current market dynamics suggest a bullish outlook for silver, investors should remain cautious and consider these variables. In summary, historical price trends show that silver has the potential for substantial gains, especially during times of economic uncertainty. Expert predictions vary, but many agree on a bullish outlook for silver in the coming years. Kraut's $700 prediction, though ambitious, is grounded in a detailed analysis of market trends and historical patterns.
Double, triple normal volumes, trading volumes in some stocks, ups on the upside, with silver running up and these names coming up and running up, and especially in the juniors. If you see those kinds of big moves volume wise in the trading of those stocks, then start to look for it, especially if you're lucky enough to have doubles or better in some of those your exposure in those names. Look to start taking profits when you see that kind of thing start to happen, and it will happen. You're going to get days where so far we've had a few days where silver has moved 5-6% in a day. And that's pretty hefty for an asset, even for a relatively small market. But it's a global market and it's liquid, so that's still a pretty big deal. But when you start to see even beyond that, maybe 8%, 10% in a day, it's if silver is at $30 and for it to move 10% is $3. not such a big deal. 10% at $35 is 350. Doesn't seem like a big deal, but 10% is a pretty big deal in a single day, for example, in a market and in an asset like that. So I think those kinds of things are going to be clues. Large percentage gains in a single day or multiple days is even a bigger clue. You get this, I think that's sort of a clear signal of fear and people starting to pile into a certain asset is that you had multiple days of strong gains, multiple percent, multiple days in a row, and then big volumes trading in some of the stocks. And obviously, hand in hand, you're going to get these big gains in some of those stocks as well. So these are the most obvious clues, I think. And then obviously starting to see, the silver price ticker running by on some of the mainstream media. That's something you don't see it all these days.
Technical analysis provides valuable insights into price trends and potential future movements by examining historical price data and chart patterns. In the case of silver, technical indicators align with Peter Krotz's prediction that prices could soar to $700 per ounce. Let's delve into the technical aspects that support this forecast. Historical patterns and key resistance levels. Silver's historical price patterns reveal significant levels of resistance and support. The $30 per ounce mark has been a crucial resistance level, repeatedly tested and eventually breached. This psychological barrier, once broken, often leads to substantial price rallies. For instance, when silver last broke above $30 in 2011, it quickly surged to nearly $50. This historical precedent suggests that surpassing key resistance levels can lead to accelerated price increases. Currently, technical analysts are eyeing the $50 mark as the next major resistance level. Once silver convincingly breaks through this barrier, it could pave the way for rapid gains towards higher targets, including Krotz's ambitious $700 prediction. Gold to silver ratio. The gold to silver ratio is another critical technical indicator. Historically, this ratio averages around 60 to 1, meaning it takes 60 ounces of silver to equal the price of 1 ounce of gold. However, this ratio can fluctuate significantly. During market extremes, the ratio has reached as high as 120 to 1 and as low as 15 to 1. Currently, the ratio stands around 80 to 1, indicating that silver is undervalued relative to gold. Krotz's analysis suggests that as gold prices rise, potentially reaching $5,000 per ounce by 2030, the gold to silver ratio will normalize, driving silver prices higher. If gold hits $5,000 and the ratio returns to historical norms, silver could indeed reach several $100s per ounce, supporting Krotz's $700 target. Futures market and COT reports. Commitment of traders, COT reports provide insights into market sentiment and the positioning of various market participants. Recent COT reports for silver show a bullish trend, with commercial and non-commercial traders increasing their long positions. This indicates strong market confidence in rising silver prices. Additionally, futures market data reveals that silver contracts are being accumulated at increasing rates, suggesting that investors anticipate higher prices. The combination of bullish COT reports and rising futures market activity aligns with a positive outlook for silver. Technical chart patterns. Technical chart patterns, such as ascending triangles, head and shoulders, and cup and handle formations, are currently evident in silver price charts. These patterns typically indicate bullish trends and potential breakouts. For example, the current ascending triangle pattern in silver charts suggests that a breakout above the $30-$50 resistance level could lead to a sustained upward trend. Future outlook. The convergence of these technical factors, historical resistance levels, the gold to silver ratio, COP reports, and bullish chart patterns, paints a promising future outlook for silver. While the path to $700 may be volatile and influenced by various economic factors, the technical analysis supports the possibility of substantial price increases. As we move forward, we will discuss the risks and considerations that investors should keep in mind when evaluating these predictions. But before that, what do you think about the technical analysis supporting Krotz's prediction? Share your thoughts in the comments, and don't forget to subscribe for more expert insights. Now let's explore the potential risks and considerations involved in this silver market forecast.
So as a deal, yes, especially sort of medium to longer term. I will say that I would not be surprised as we work our way through the summer that we could, and I'm not saying this has to happen. I'm saying we could see some kind of a pullback, sort of a reckoning, a digesting of these gains that because silver's up about 45% since the late February lows. That's just tremendous. It's up about 35% since the year started. That's about almost triple what gold is up. So that's fast and furious. I think we could see some kind of a digesting phase consolidation where silver will perhaps test somewhere below 30. My first target would be 28. If we really got a washout, perhaps 26. But I think that 30 is before long going to start to become a new floor. I've been pretty impressed with how resilient silver has been over the $30 mark, and retesting 32 in the last few days again. So again, if you don't feel like you're exposed enough to silver, and you see it somewhere below 30, I'd say it makes good sense to probably start at least nibbling at it and increasing a position or starting a new position if someone doesn't have any exposure, and build on that. And as I say, it's kind of like the mining stocks: buy in tranches at least and mitigate your risk. Do what's called dollar cost averaging. But this is a bargain. There's no question. And if you look at, as I say, the pricing in China, for example, up to $4 more per ounce, then people in the West certainly have access to a bargain right now, whether silver is a.
While Peter Kraut's prediction of silver reaching $700 per ounce is supported by compelling arguments and technical analysis, it's essential to consider the potential risks and factors that could influence this forecast. Investing in silver, like any other asset, comes with inherent risks that need to be carefully evaluated. Market volatility. The silver market is known for its volatility. Prices can fluctuate widely due to various factors, including changes in investor sentiment, geopolitical events, and economic data releases. This volatility can lead to significant short-term price swings, which may be challenging for investors to navigate. While the long-term outlook may be bullish, short-term market dynamics can create periods of intense uncertainty. Economic conditions. Global economic conditions play a crucial role in the demand for silver. Economic downturns, changes in industrial demand, and shifts in consumer spending can all impact silver prices. For example, a global recession could reduce industrial demand for silver, leading to lower prices. Conversely, economic growth could boost industrial demand and support higher prices. Investors need to monitor economic indicators and be prepared for potential fluctuations. Interest rates and monetary policy. Interest rates and monetary policy decisions by central banks significantly affect precious metals markets. Higher interest rates typically reduce the appeal of non-yielding assets like silver, as investors seek higher returns from interest-bearing investments. Conversely, lower interest rates can increase the attractiveness of silver. The Federal Reserve and other central banks' policies will be crucial in determining silver's future price trajectory. Supply chain disruptions. Silver supply is subject to various disruptions, including mining challenges, geopolitical issues, and regulatory changes. Any significant disruption in the supply chain can affect silver availability and prices. For instance, stricter environmental regulations or labor strikes in major silver-producing countries could limit supply and drive up prices. Conversely, new mining projects and technological advancements could increase supply and temper price gains. Technological substitutes. While silver is widely used in industrial applications, particularly in electronics and solar panels, technological advancements could lead to substitutes that reduce demand for silver. For example, the development of new materials or technologies that replace silver in solar panels or electronic components could impact its demand and price. Investor sentiment and market speculation. Investor sentiment and market speculation can drive significant price movements in the silver market. Positive sentiment and bullish market speculation can lead to rapid price increases, while negative sentiment and bearish speculation can cause sharp declines. It's essential to be aware of market trends and sentiment, as these factors can heavily influence price volatility. Geopolitical factors. Geopolitical events, such as trade disputes, political instability, and changes in government policies, can impact silver prices. For instance, heightened tensions between major economies could affect trade flows and industrial demand for silver. Conversely, stable geopolitical conditions may support more predictable market dynamics. Long-term sustainability. While Kroth's prediction is grounded in solid analysis, it's important to consider the sustainability of such high price levels. Once silver prices reach significant highs, the market could experience profit-taking, increased supply from recycling, or a shift in demand patterns. Investors should be cautious and consider the potential for market corrections. In conclusion, while the case for $700 silver is compelling, it's crucial to weigh these risks and considerations. Diversification, thorough research, and a clear understanding of market dynamics are essential for navigating the silver market successfully.
So, Elijah, I think that the market is coming to terms with the idea that supplies of silver are limited. And although there have been some considerable above ground stocks of several billion ounces, we've seen that steadily being drawn down over the last several years. In fact, if you look at the three large major futures exchanges, so that's COMEX, LBMA in particular, and then the Shanghai, and you look at also the silver ETFs globally, they've been drained in a considerable to a considerable degree. And there's some research actually from Sprott just a few weeks ago showing that inventories have dropped about 40% since 2021. So this is across the three large futures exchanges that hold above ground silver inventories. So, there's always the pushback, which I don't disagree that there's a lot of silver that's held, off of, I guess, what would be reported areas. You've got people who own it privately, physical silver, bars and coins. You've got perhaps some high net worth individuals, perhaps even a few sovereigns. But I think the question becomes, because there's the argument that that's a source of silver if the silver price is high enough to start meeting demand, and I agree. I just think that we are in such uncharted waters when it comes to economics in the last several years that I think that yes, those inventories can and will to some degree come to market, but only under much, much higher silver prices. So I would certainly not, as I say, some bank on that in terms of meeting.
We've explored the key factors driving Peter Kroth's bold prediction of $700 silver: dwindling physical supplies, the shift of pricing power from west to east, surging industrial demand, historical price trends, and supporting technical analysis. Now let's pull it all together and explain why $700 silver is a realistic target, despite the associated risks and considerations. Dwindling physical supplies. The sharp decline in above-ground silver inventories is a critical factor. With supplies dropping by approximately 40% since 2021, the market faces a potential supply crisis. As these inventories continue to deplete, the imbalance between supply and demand will exert upward pressure on prices. This is a fundamental economic principle. When supply diminishes and demand remains strong or increases, prices rise. Shift of pricing power from west to east. Eastern markets, particularly China and India, are exerting increasing influence over global silver prices. China's dominance in solar panel manufacturing and India's ambitious renewable energy projects are driving unprecedented demand for silver. These countries are willing to pay premiums for the metal, indicating a strong and growing demand. As the East continues to accumulate silver and exert pricing power, global prices are likely to follow suit. Surging industrial demand. Silver's extensive use in high-tech industries, especially in solar energy, electronics, and electric vehicles, ensures a robust and growing demand. The global shift towards renewable energy and green technologies will only accelerate this trend. As solar panel production increases and electric vehicle adoption rises, the industrial demand for silver will continue to surge, supporting higher prices. Historical price trends and technical analysis. Historical trends show that silver prices can experience rapid and significant increases during times of economic uncertainty and high demand. The gold-to-silver ratio suggests that silver is currently undervalued relative to gold, providing further room for price growth. Technical analysis supports this outlook, with bullish patterns indicating potential breakouts above current resistance levels. Risks and considerations. While the path to $700 silver is fraught with risks, these can be managed through careful investment strategies and staying informed about market developments. Market volatility, economic conditions, interest rates, and technological advancements are all factors to monitor. However, the overarching trends of limited supply, growing demand, and shifting market power create a compelling case for substantial price increases. Conclusion: Peter Krott's prediction of $700 silver is grounded in a comprehensive analysis of market dynamics and historical patterns. The convergence of dwindling supplies, shifting pricing power, surging industrial demand, and supporting technical analysis forms a strong foundation for this forecast. While there are risks to consider, the potential rewards make silver an attractive investment opportunity. Investors should approach this market with a clear understanding of the factors at play and be prepared for both the opportunities and challenges ahead. By staying informed and strategic, you can position yourself to benefit from the significant upside potential in the silver market. Thank you for watching. If you found this analysis insightful, please subscribe to our channel for more expert insights and market updates. Remember, this video is not financial advice. Always do your own research before making investment decisions. Let's continue the conversation in the comments. Do you think $700 silver is possible? Share your thoughts below. Long-term sustainability. While Krott's prediction is grounded in solid analysis, it's important to consider the sustainability of such high price levels. Once silver prices reach significant highs, the market could experience profit-taking, increased supply from recycling, or a shift in demand patterns. Investors should be cautious and consider the potential for market corrections. In conclusion, while the case for $700 silver is compelling, it's crucial to weigh these risks and considerations. Diversification, thorough research, and a clear understanding of market dynamics are essential for navigating the silver market successfully.